Morning, guys. It's Tuesday, October 28th, 5:25 a.m. Central Time. Grain markets are higher across the board this morning. December corn futures up 2 cents at 4.30 3/4. January soybeans up 10 3/4 at 10.95 3/4. December Chicago wheat up 4 1/4 at 5.30 1/4. December Kansas City wheat up 3.5 cents at 5.17 3/4. December spring wheat up 3 1/4 at 5.63 1/2. The soybean market is on fire. Why don't we start there?
Soybean futures climbed to their highest level since June yesterday. The rally was fueled by optimism that China may resume purchases of U.S. soybeans after President Trump suggested a potential trade deal could be reached during his upcoming meeting with Xi Jinping. The November 25 soybean contract rose about 26 cents, settling near 10.67 per bushel. Corn and wheat futures also moved higher, with the December 25 corn contract up nearly 6 cents to close around 4.29 per bushel, and December Chicago wheat gaining roughly 14 cents to close at 5.26 per bushel.
Would you look at that? Fresh calendar year highs in the soybean market, despite all of the headlines, despite all of the chatter. Trump is destroying the soybean market. He's destroyed the U.S.-China trade. Hasn't destroyed the market. Well, the futures market, at least. Now, I will say I was looking at some cash bids this morning. You've still got cash soybean bids in North Dakota and South Dakota that are in the nines. There's still not really any material evidence of Chinese buying or increased demand. But the trade, the way that it would appear, is taking Trump's word for it. Trump was on Air Force One yesterday. He said, I've got a lot of respect for President Xi, and I think we're going to come away with a deal. We have China coming, and it's going to be very interesting. Large speculators were estimated, and these are estimates because CFTC is closed along with the rest of the government. Private groups estimate that the funds, large speculators, were net long nearly 60,000 contracts of soybeans at yesterday's close. So the trade is buying what Donald Trump is selling. And we had a lot of comments yesterday. I don't believe a word that Scott Bessent says. I don't believe a word that Donald Trump says. You know what? You might be right. And Mackenzie, did you know that anybody can trade soybean futures? Anybody?
Yeah, I was aware of that.
Anybody. So,
Yeah.
if you're in the comments and you like really firmly don't believe what's going on here, and you very well could be right. The casino is open. You can jump in and sell soybean futures as a speculator and see if you can make a few bucks. Now, that's not what I would recommend. I wouldn't trade soybeans as a speculator with anybody else's money, let alone my own money. This is risky business. But just to let you guys know what's available to you out there, not a recommendation. You look at the weekly chart, and the soybean market is up against the extreme upper end of what has been a 15-month trading range. So if we can get this nearby November contract, which is now your spot contract, even though January has more volume, you get this thing up above 1081 and get it to stick, it's going to look a hell of a lot better. It could induce some additional short covering, some additional speculative buying. Let's look at the corn chart. We are very close to some key resistance this morning. December corn futures, you've got an old gap from back in July. You got to get up to 4.32 3/4 to hit that. We got very close this morning, but we did not fill that gap. We got up to 32.5. So we missed filling the gap by a tick, and this could look different by the time a lot of you guys watch this. But if you could close these corn above, call it 433, 434, I think that would start to look very good. I pulled a weekly continuation chart of HRW wheat, and the wheat market has also followed along a little bit. There's a couple of big trend lines, and we're kind of sitting right here. I'd like to see Kansas City wheat futures close above, call it 521 today, and things would start to look better. So lots of optimism here. We don't have anything material in terms of an inked deal with China, but a lot of people seem to believe that that is forthcoming.
U.S. corn and soybean harvests are nearing completion. According to a Reuters poll of 10 analysts, as of Sunday, the U.S. corn harvest was 72% complete compared to 81% at the same time last year. The soybean harvest was estimated at 84% complete versus 89% a year ago. Estimates for corn ranged from 67% up to 80%, while soybean estimates ranged from 80% to 88%. Rainfall slowed progress in parts of the Corn Belt, though harvesting continued steadily in other areas.
I believe these estimates to be close to reality. Of course, the government is closed, so we don't have their reports, but this stuff is probably fairly realistic. I'm curious, and maybe this should have been in the last story, but I'm curious what has happened to basis in your neighborhood the last couple of days with this little pop. I heard from some people, hey, basis deteriorated yesterday when corn rallied or when soybeans rallied. If you guys have some basis comments, drop them in the comment section here on YouTube.
U.S. soybean shipments were near the lower end of pre-report expectations last week. USDA reported that 39 million bushels of soybeans were inspected for export during the week ending October 23rd. The print was down 33% compared to the prior week and down 60% versus the same week last year. Corn shipments were also near the lower end of expectations at 47 million bushels. The print was down 10% compared to the previous week, but up 38% versus the same week last year. Wheat shipments fell below expectations at 10 million bushels. The print was down 48% versus the previous week and down 12% compared to the same week last year.
The soybean shipment number is just outright bad. So even if there is optimism, even if there are some export sales going on behind closed doors, we're not seeing the shipments, not yet. That print, it's just going in the wrong direction. We should be increasing this time of year on a weekly basis up until about November 1st or maybe second week in November. And we saw a big week over week decline. That seasonal print in soybean shipments was the worst since the same week in 2011, 2012 marketing year. You got to go back a ways to find a soybean shipment number this bad for this time of year. Who's buying U.S. soybeans, or who are the top destinations? It's not China, of course. I believe the top destinations were Indonesia, Israel, and Italy. So you've got a lot of non-China buyers coming in and receiving soybeans from the United States, but not a good print. I hope better prints are to come.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
Done a couple of grain marketing videos during the last 3 or 4 days because the markets are finally moving and they're becoming a little bit more exciting. And perhaps that has presented us with some degree of marketing opportunity. Now, I understand that corn prices, soybean prices, wheat prices, they're all still below production cost. This is not any sort of golden opportunity by any means, I don't think, but we have improved. So it's worth reviewing the marketing situation. I kind of laid out a game plan for my premium subscribers in terms of cash sales. What I advise basically are just cash sales broken down by crop year and percentage. I don't do anything more complicated than that. I will talk about rolling HTAs or cash sales, that sort of thing. But I don't really advise much in terms of futures or options. And I had a couple people comment yesterday, Joe, you're always hating on futures and options. No, I'm not. I know for a fact that there's a huge, it's the majority of farmers in the United States don't want to use futures and options in their marketing. So I am catering to that crowd. I'll let the rest of the industry cater to the futures and options crowd. So if you're part of that crowd, you're part of the majority. Hey, I don't want to be trading futures and options every day or every month or every week or at all. What I'm doing here is for you. So you might want to give that deal a shot. Chris Barron was on Friday last week, fall logistics and dock versus shrink. He made a free tool available. Should you haul wet corn? Should you dry it? It's not a debate, but it's something that can be settled mathematically. And Chris made a free tool available. Shay is going to be on today talking about some 2026 stuff, some general marketing thoughts. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody tried to say anything else. I don't want to talk to you ever. I'd really just love to throw my phone in the river and never see it ever again. I don't even make my phone number available. We'll put you on the text message list if you want to. You can reply to the emails, and I will get back to you, of course, if you have questions. Super easy to do on your phone. I know you guys are busy. Sign up, when you're stopped, of course, not when you're driving the combine or the truck or whatever. But give that deal a shot this morning, guys.
Brazilian soybean planting is progressing rapidly. According to well-followed private group Ag Rural, as of last Thursday, 36% of the crop was planted, up from 24% the previous week and in line with the same period last year. Ag Rural also reported that planting of Brazil's first corn crop is 55% complete compared to 53% last year. Conab is projecting Brazil's soybean crop to reach 177.6 million metric tons, a 3.6% increase over last season. Total corn production is pegged at 138.6, down 1.8% from last season.
We talked a little bit about dryness in Brazil, and over the last 7 days, they've only seen, I think, 29% of normal rainfall in Brazilian soybean areas. So it's been dry, and they really need the rain during planting. The forecast, however, looks quite a bit better. They're looking for above normal rainfall in Brazilian soybean areas over the next 7 days, and same thing during the 8 to 14-day period. Thank you to our friends at Crop Profit for allowing us to use their stuff, which is absolutely fantastic. If you're a fund trader, if you're sitting on a commercial grain desk and you're not subscribed to Crop Profit, you're out of your mind. This stuff makes my job much easier because their data is just fantastic, super user friendly, and the stuff that we show you guys here is just a tiny fraction of what they make available.
U.S. cattle futures plunged for a second straight session yesterday. With the exception of the front month contract, all feeder cattle contracts fell to their daily expanded limits. Live cattle contracts, meanwhile, did not hit their expanded limits, but still posted steep losses, ranging anywhere from 492 per hundredweight down to 982 per hundredweight. Trump's plan to increase imports of Argentine beef continued to pressure futures, along with the possibility of Mexican feeder cattle imports resuming, as Ag Secretary Brooke Rollins is set to meet with Mexico's Ag Minister later this week to discuss reopening the border. Additionally, over the weekend, President Trump held a productive meeting with Brazil's president on trade, which could prompt tariff adjustments and potentially reopen Brazilian beef imports.
There's my analysis, skull and crossbones. It doesn't look very good, and this is a break that's, I guess it's not based only on rhetoric, but for the moment, like the Argentina beef stuff, the potential Brazil stuff, the screwworm stuff, it's all just speculation, right?
Oh, for certain, yes. Like we talked about yesterday, nothing has changed with fundamentals. This is just headlines.
Here's feeder cattle, same thing, super ugly. I figured I'd throw in some additional kind of bigger picture context. You pull this thing back and look at the rally, which I would argue started with the COVID lows in 2020 or even before that, and we've done nothing but rally for years now. I mean, I don't think the trend has been busted. It's a nasty correction in a very short period of time, but it would appear to me, at least for the moment, as if your long-term uptrend remains intact. Feeder cattle exactly the same way, and I've got this little regression channel on the chart here if you guys are watching. We actually kind of peaked out above that, and maybe this thing had just become a little bit overdone. And it's funny how sometimes the technicals and then the fundamentals kind of follow, and it all kind of works out that way. So we're in correction mode for sure, but I think it's premature to say that the multi-year bull market is over. Okay, we talked about cattle price action. Outside markets, S&P 500 is flat this morning. The Dow's up 50 points. We've got treasuries mixed. Crude oil is down 80 cents in the December WTI 60.51. Have a great day, guys. We'll be back on Wednesday.